Ladies and gentlemen, good day and welcome to Salzer Electronics Limited Q1 FY'25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Poonam Sankve from Progressive Shares. Please go ahead, ma'am.
Thank you, Nitika. Good afternoon, everyone. On behalf of Progressive Shares, I welcome you all to the Q1 FY'25 post-earnings conference call of Salzer Electronics Limited. This conference call may contain forward-looking statements which are based on the beliefs, opinions, and expectations of the company as of the date of this call. These statements are not guarantee of future performance and may involve risk and uncertainties that are difficult to predict. I now invite Ms. Savli Mangle for the opening remarks to be followed by a question and answer session. Over to you, ma'am.
Thank you. Good afternoon, everyone, and thank you for joining us today to discuss the unaudited financial performance for the quarter ended 30th June 2024. I have with me Mr. Rajesh Doraiswamy, Joint Managing Director, Mr. P. Sivakumar, Assistant Vice President Marketing, Mr. S. Venkatachalam, General Manager Commercial, Mrs. R. Menaka, General Manager Accounts, Mr. K. M. Murugesh, Company Secretary, Mr. Jitendra Vakharia, Director, KC Industries, and Mr. Raman, COO, KC Industries. I will now take you through the consolidated unaudited financial performance for the quarter ended June 30th, 2024. During the quarter, our revenues increased by 24% year-on-year to rupees 357 crores from rupees 289 crores in the previous corresponding period. This growth was mainly driven by higher demand for industrial switchgear and wiring cable businesses due to better market conditions. On the exports front, our share of revenue was nearly 26%, demonstrating a year-on-year growth of nearly 37%. The EBITDA, excluding other income, was rupees 33 crores in Q1 FY'25, as against rupees 26 in Q1 FY'24, a YOY growth of 28%, mainly on account of increased sales in higher margin switchgear products and wiring cable businesses. The EBITDA margin for the quarter increased by 34 basis points to 9%. The profit after tax grew nearly by 45% to 15 crores in Q1 FY'25. Moving on to the breakup of revenue as per business division. The industrial switchgear division contributed to 52% of the total revenues in this quarter. This business grew 26% year-on-year in the quarter, and the EBITDA margin increased nearly 13% in Q1 FY'25, an improvement of 160 basis points. Two of our high demand and high margin products, the three-phase tri-type transformer product, grew 6% year-on-year, and the wire harness product grew 30% year-on-year during the quarter. The wires and cables business contributed to nearly 43% of our revenues in this quarter. This is nearly a 31% increase year-on-year, and the EBITDA margin in this business stood at 5%. The building products division has contributed nearly 5% to our revenues in this quarter. This business is the only B2C business that we have, wherein we sell many electrical products for the building sector. Due to higher sales outstanding, we have been slowing down sales to specific distributors. We've also been doing some reorganization in teams and channels, which we expect going forward will improve the growth trend in the coming quarters and help us increase our contribution from this segment. I would like to now hand over to Rajesh, who will take us through the business developments and the way ahead. Thank you.
Thank you very much, Savli. Good afternoon and a very warm welcome to Salzer Electronics Limited's earnings conference call for the first quarter ended 30th June 2024. I would like to thank you all for taking the time today to join us for this call. We have already shared our results update presentation and the media release. I hope you all must have received it and gone through the same. I would like to share some recent developments and outlook for the future. In general, the market outlook, as far as the Indian switchgear market is concerned, it's projected to grow by US dollars 4.14 billion with a CAGR of 7.5%, close to 7.5% from 2023 to 2028 for the next 5 years. This growth will be mainly driven by increasing renewable energy generation, the rise in residential and commercial building projects, and the expansion of transmission and distribution networks. The rapid development in power distribution sector and the rising demand for renewable energy provide significant opportunities for all the market players in the industry. As the Indian government invests more in renewable power to combat environmental pollution and global warming, the switchgear market will benefit from the expansion of power grid and increased adoption of renewable energy, which is actually becoming more cost effective. Additionally, smart switchgears, which enhances energy distribution efficiency and reduces cost, is expected to drive the market growth. The integration of digital technologies and intelligent power management solutions will further support market expansion, ensuring safer, more sustainable, and efficient energy management practices across the various industries in India. Similarly, the global switchgear market is projected to experience robust growth, reaching 117 billion by 2028 with a CAGR of 6.5%. This growth is also driven by increasing electricity demand, expanded use in transportation, renewable energy investments, rising electricity needs from manufacturing, and the replacement of old switchgears. Furthermore, India's ambitious renewable energy targets, expansion of power transmission and distribution, and increasing investment in real estate and transportation sector are driving positive developments in the wire and cable industry, promising a bright future. We are at Salzer ready and determined to adapt swiftly to these changing circumstances and embrace a proactive approach to steer our business towards growth and resilience. At Salzer, we view challenges as opportunities to innovate and evolve, and we strategically positioned ourselves to pivot from the economic scenario. As we expand our product portfolio and explore new growth opportunities, we are very confident in our ability to meet our strategic goals and provide value to all our stakeholders. I would also like to now talk about some of the key developments on the business performance of Salzer. I am pleased to announce that the installation of machinery and testing equipments at our smart meter factory is now fully complete. Additionally, our factory test lab has also received certification from NABL and IAS certification bodies. Currently, our smart meters are being evaluated by at least 7 AMI SPs in India, and we are in advanced discussion with these customers to secure orders for our smart meters. However, having entered into the market, the company also acknowledges several challenges along with the opportunities. There is resistance to smart meters in some areas due to perceived higher charges and an anticipated shakeout in the smart meter industry with new entrants and potential quality issues. Furthermore, potential delays in installation by the ASPs could also arise from difficulties in integrating the meters with existing software and ensuring consistent service levels. Apart from smart meter, we are also planning to establish a wholly owned subsidiary in Saudi Arabia, where we will be manufacturing a few of our fast-moving products. Currently, we are exporting to a few major OEMs in Saudi Arabia. As the Saudi government regulates and insists of increased local content rule, this will in turn enhance the demand for Saudi locally made products. So setting up a facility in Saudi Arabia will also meet the local demand and also provide duty-free access to other GCC countries. Looking ahead, the company remains cautiously optimistic about the growth opportunities in the global market. Salzer is focusing on revenue and margin expansion to navigate challenges and capitalize on emerging trends. The positive market outlook is bolstered by the strong demand in India and the significant infrastructure investments that's being made in India. Additionally, the company is also exploring markets such as Australia, New Zealand, and the Middle East to fuel its growth ambitions. There are also geopolitical challenges which we have to keep in mind, which may reduce the demand from the Western markets particularly. Now, with respect to our subsidiary KC Industries Limited, the sales have been growing well and the EBITDA margins are also getting better. KC's top line grew 11.5% to rupees 12.6 crore from 11.3 crore last year first quarter. EBITDA grew 48% to 2.2 crores from 1.5 crore last year. PAT is rupees 1.5 crore in Q1 FY'25 compared to rupees 0.9 crore in Q1 FY'24. PAT margins also improved substantially to 11.93% this quarter from 7.7% last year Q1. For FY'25, Salzer Electronics provides a positive revenue growth guidance of 18 to 23% for this year. The industrial switchgear business is expected to grow by around 22 to 23%. Wire and cable business will be growing approximately between 18 and 20%. The building segment products we expect to grow by around 40%. The company is also targeting an improvement in EBITDA margins by close to 100 basis points, aiming for a margin range of 10% to 10.5%. I thank the entire team at Salzer Electronics for their untiring efforts and all our stakeholders for their continued support and faith in our company. This is all from our side for now. I would like to thank you all once again for your time and attention. We can now take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bala Murali Krishnan from Oman Investment Advisors. Please go ahead.
Hi, good morning, Mr. Yes. So I would like to have any update on this EV charger manufacturing. So last time we have one test was our product was failed in one test. So further any update on that one? And are we in any discussion with any customers regarding this supply of EV chargers?
As of now, I don't think there is any significant improvement in the status of what we were during the last quarter. So that's why I think there is no update. We haven't put any update on that as of now. So it's still on the development and testing stage as far as Salzer Coast Guard EV chargers are concerned. However, I would also like to update you. I think you all also must have seen from the media release of the KC Industries that our subsidiary KC Industries has actually invested and taken 30% stake in a fast charger manufacturing company in Hyderabad. That's a development that has happened in this quarter.
Okay, thanks for that one. And regarding this smart meters, so we are trying to supply to the customers who already won the tender from the government. So I think we also have an idea to participate in the tenders directly. So is there any update on plan for that one?
Now, as I mentioned in the last call, yes, we are not closing down any opportunities. All opportunities are open for us. But however, our focus right now is to secure orders for our smart meter factory and get the smart meter factory up and running. and also to prove to the customers that our meters are high quality, and we will be a reliable supplier and partner to the customers. So that's the first focus. However, we are definitely open to see if there is an opportunity to participate in tender. We will be doing so.
Okay. And is it possible to name any few customers which you are under discussion and last discussion?
There are multiple customers that we are talking to. The large AMISPs, including Adani's, GMRs, NCC, and a few others. So as I mentioned, there are seven of the customers that we are talking to.
Okay. And lastly, on this Saudi Arabia plans, so basically the cost of manufacturing would be slightly higher over a year, be considering the manpower cost, everything. So do you think that it will affect the margins going forward?
The idea is like we are trying and testing the markets, testing the waters is what I can say. Yes, I think the cost of manufacturing will be a bit higher compared to what it is in India. But there are regulations in Saudi Arabia for increased local content currently. May I request the people to be on mute if those are all who are not on mute, because there's a lot of disturbance coming. I'm sorry. So there are increased local content regulations that's in Saudi Arabia. It's coming. Like everywhere, India was also insisting on local content. So now Saudi also is insisting on a 40% local content for all their projects and OEMs. So in turn, they are looking at locally manufactured products, even though it's more expensive. So that's where we are trying to see whether we can have some kind of a first mover advantage in the products that we are manufacturing.
Okay, that's all. Thanks a lot, sir. All the best.
Yeah.
Thank you very much. The next question is from the line of Devnesh Singla from DS Fund Managers. Please go ahead.
Hello.
Hello. Yes, sir.
Yes, sir.
Am I audible? Yeah. Am I audible?
Yes, sir, you're audible.
Yes, we tried to calculate the smart meter business value of it using discounted cash flow. We wanted to ask, like, what will be the working capital requirement for the business, working capital days for the same?
If I understand your question right, you're asking what will be the working capital requirement and working capital days for our smart meter business.
Yes.
Correct?
Yes.
Okay. Before that, I would also like to give an update on the working capital days on Salzer for the current quarter, how it is working. We have actually considerably reduced the number of days from around 150 to around 130 days in this quarter. So that's a big improvement. And on the what do you call smart meter, we expect that the net working capital days will be much lower compared to what our current business is. The reason being, I think we expect very low data days, not more than 45 days at the max. And also, since the product SKUs are also limited, so we also expect that the inventory to be not very high, because it's going to be a constant moving product. So the inventory also, we don't expect it to more than around 60 days at the max. So if you put together, the net working capital should not be more than around 75 days.
Yeah, contrary to the same, like in this product, there will be subsidies from the government. Like some payable will be from the government. You will directly get paid from the government or from the AMISP? Like
our business is only with the AMISPs.
Okay, so you will not be affected by any delays of payment from the government, right?
No, that will get affected only if we go and do a direct tender business. Direct business would be of the discoms.
Okay, and also I checked the working capital requirements of the competitor Genus Capital. That is extremely high, like approx 200, 250. Is it something?
I fully agree. I think the model of Genus is a little different, because Genus does business with the discoms directly.
Okay, got it, got it, got it. And my second question is related to that EV charger. What will be the projected growth after 5 years? And also, like, we will be getting only 26% benefit, right, from that because of JV. Am I correct?
Yes. No, currently we own 60% in the JV.
60%.
Yeah.
Along with that, like, new investment you made, right?
Yeah.
Okay. Okay. And what will be the projected, like, sales after 5 years? Any rough idea?
I think it will be very, very futuristic to say what will be the business beyond 5 years, because the entire EV market itself is still evolving. Because we see news of declining electric vehicle sales in Western countries right now. So there are a lot of things that is happening around electric vehicle market. However, in the Indian market, we see a lot of potential, and that's why we are continuing to be involved in this business, and we are also continuing to invest in this business through our subsidiaries. However, to give a figure 5 years from now will be highly difficult.
Any rough idea, 2 years, 3 years, a numerical idea?
That's what I'm saying. It is still evolving. But if we look at our competition, then we will be able to have some kind of an idea. So we can look at some listed competition of electric vehicle charger manufacturers like Servotech or I forgot the other name of the other company. It's also another listed company in electric vehicle charger space. So there are two companies who are making chargers, and if you see, they are close to around 200 crores of revenue in electric vehicle chargers today.
Okay. So you will look like projecting based on that. Well, it's comparable company.
Yeah.
Oh, thank you. That's all from my side.
Thank you very much. To ask a question, please press star and one now. Participant who wish to ask question may please press star and one now. The next question is from the line of Hemant Saraf from Saraf and Associates. Please go ahead, sir.
Good afternoon, sir.
Good afternoon. Good afternoon.
Good set of numbers. I would like to know, sir, what I see from last quarter results, there is change in inventory of 10 crores. So is it because of smart meter inventory built-up or something else?
Say that again. I didn't understand your questions.
Sir, change in inventory is of approx 10 crores. So I want to know whether it is smart meter inventory built-up or something
What
else.
inventory 10 crore you're talking? Where is the figure from?
Change in inventory.
Huh?
Change in inventory.
P&L inventory.
Sell stock adjustment.
Okay, changes in inventory. Okay. Yeah, okay. Understand. This quarter you are talking, the change is inventory for 10 crores. Yeah, it's a stock increase by 10 crore.
Okay. Is it related to smart
No,
meter?
it's not really related to smart meter. It also includes smart meter, but it's not fully related to smart meter. It's mainly related to the regular business.
Okay. And sir, what is expected capex for the wholly owned subsidiary which we are planning for Saudi Arabia and Saudi Arabia?
We are planning for an investment of around 10 crores in total to start with.
Okay. Thank you. That's it, sir.
Thank you very much. Participant who wish to ask question may please press star and one at this time. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Deepak?
Yeah, hi. Am I audible?
Yes, sir.
Yes, now audible. Yeah.
Okay, great. So I just wanted to check, on the smart meter front. So when is I think we have already in discussion for securing orders. So when we expect the revenue to start from smart meter, and accordingly this year and next year, what sort of revenue built up we are looking to garner in smart meter and what margins?
I think the revenue should start definitely this year. But what kind of a revenue? I'm hopeful that in the second half of this year we should be having revenues coming in from the smart meter. We expect at least 200 crores of revenues from smart meter this year, and next year it will be a full capacity run, which then we will be able to do close to around 1,000 crores for next full financial year. That's our plan, and that's what we are expecting.
Understood. And at what margins?
We are looking at an EBITDA margin of around 14% there.
At full utilization?
Yes.
And so FY'25 margins here would be much lower, right, because of your lower utilization?
Not very much lower, but should be at around 11%.
11%. Understood. And this is over and above what you have mentioned in terms of your guidance of 18 to 23% kind of a revenue growth?
Yes. Yes.
Okay. Fair enough. I think, that would be it from my side. All the way best to you. Thank you.
Thank you very much.
Thank you. The next question is from the line of Prathamesh Thiwar, Tiger Assets. Please go ahead.
Yeah, sir. Am I audible?
Yes, sir,
Yes.
you're audible.
Yeah. So just couple of questions on acquisition side. So as I'm new to the company, what are the recent acquisitions that we have done? And in coming time, are we planning for any acquisitions? So this is my first question.
We haven't, Salzer has not done any acquisition in the recent past after KC.
Okay.
KC Industries in 2019, we haven't done any acquisition. And of course, there are a lot of opportunities that keep coming to our table, and we keep discussing opportunities, but there's nothing significant as of now.
Okay. And so what's the total capex outlay for FY'25?
For current year?
Yeah, FY'25, current year.
FY'25, our total capex will be close to around 50 crores because we have invested close to around 25 crores in the smart meter factory. So apart from that, we will be doing another 20 crores for capex for this year.
Okay. And so just, I missed it earlier. How much margins are we saying on smart meter side? EBITDA margins?
We are looking at 14% EBITDA for smart meters.
Okay. Thank you so much.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. To ask a question, please press star and 1 now. The next question is from the line of Praneeth. Please go ahead.
Hello, am I audible?
Yes, you're audible.
Yes, I was wondering about the product mix and how we are going forward with how do we want to see our products mix going forward. Till now, we've did 55% of switchgears and just 30-40% in wires and cables. Are we expecting it to improve? Are we expecting an improvement in product mix, saying from switchgears reducing a little bit more and the smart meters taking up the extra incremental revenue? How are we planning on looking at the product mix going forward?
Going forward in this year, we expect that between industrial switchgears and the wire and cable, the product mix will be between 53-55% for industrial switchgears and around 43% for the wire and cable. That's the mix that we are looking at, and the rest going for the building segment. Any smart meter that will be coming in extra, which we will have to see how the business comes around this year, and then we can give a figure for that. But for next full year, then the smart meter definitely will take up close to around 30-40% of our revenues.
Okay. And for the building segment, we've been trying to make sure the revenue contribution reaches somewhere around 10%, but we have not been able to do it in the last few years. What is the specific reason, or do you think it's going to sustain at this level for the foreseeable future? Because we've been trying to reach
multiple challenges that we are facing when we go into the retail market. One, I think we are still confined to the southern 5 states, so that's one regional constraint that we have. Second, I think there's a lot of collection issues also that comes along with the retail business that we are doing. Still we are not a very large brand like an Avels or a V-Guard or a Polycab. So we are still pushing our products instead of market pulling our products. So because of that, there are collection issues. than the regional constraints. So we are going slow and not burning away cash too much and taking the revenues up. So that is one of the reasons that we are seeing that the sales is not going up as expected. But nevertheless, we are doing our best, trying it out to see how we can make this at least an 100 crore revenue segment as soon as possible.
Are we planning on investing further into the building segment? Do we need to do capex, or is it only we need to put working capital capex for increasing the distribution?
It's only marketing expenses that we have to continue to do. There's no capex that we're doing as of.
Okay. And one more thing with the white segment, we started with the white labeling, right? So what is the split between white label and our own brand? We, I think, in between ventured into selling Salzer branded cables also. So how is the split between both these segments?
Yeah, the Salzer branded cables we are selling through our building segment division, and white labeling we are doing it for the wire and cable for companies like L&T and a few others. I don't understand what is the question that you're asking. How is it growing or?
No, I was curious. I thought in the 40% the Salzer white cables also included. So I was just curious in that way, whether are we actively marketing Salzer branded cables in other distribution channels?
We are marketing Salzer. The 43% wire and cable includes Salzer branded cables for the industrial segment, and also includes the white labeled products for L&T. And the dependency on the white label, which used to be around 80% earlier from L&T and other OEMs, have come down to close to around 60% or even less in the last year and the current quarter.
So where has the dependence reduced? Have we been onboarding more customers which are not OEMs, or how have we been doing it?
We are onboarding more customers where we are selling Salzer wires.
Okay. So the margins are better on Salzer branded products than the white label products, right?
Yes.
What is the difference in margin?
But not yet. I think hopefully it will get better.
Okay. One more question regarding the KC Industries acquisition. So we did the acquisition a long time ago, and you're expecting synergies between both the companies, because together you are already a market leader and you'll have increasing market share in the switchgear segment. So how has the synergies been going forward? Are we seeing incremental synergies going to happen, or we have stagnated in terms of our benefits through acquisition?
Yeah, I think most of the synergies have been taken care, and you see the tremendous margin improvements in KC, and we can also see the same improvements in Salzer's rotary switch business. So it's a continuous process, but we have achieved to an extent what we wanted to.
Okay. And one more reason, earlier you mentioned the fact that you invested in a Hyderabad-based charger manufacturing company through KC Industries. What is the rationale behind it? Because since we already have a JV for manufacturing fast chargers, why are we investing in another company through our subsidiary? What is the rationale behind it?
It's a startup company in Hyderabad, and it's a little different technology than what we are making. That is one of the reasons that we thought we should be in this business. Secondly, I think as I have mentioned that we are at Salzer, we are still struggling to get the technology right and get it tested. There's also issues with the collaborator giving us the technology and then getting this tested for the Indian standard. So we thought, maybe this is an opportunity that we should be in the business with other partners also. So that's one of the rationale that we have invested in this company in Hyderabad, a startup for making chargers.
So what is the company's name and what valuation did you invest this particular amount in?
The name of the company is Ultra Fast Chargers Private Limited.
Okay.
And the investment that we are going to make is around 8 crores for a 30% stake.
So a 30% stake. Understood. Are we also planning on lending any of our support also, or is just a money investment?
To start with, we're going to be an investor. We will be the single largest shareholder in the company. Going forward, any support, because it's a startup, so definitely they will need a lot of support from companies with experience for manufacturing. and marketing, etc. In that case, I think we will definitely step in and do what is required for them.
Understood. One more thing, we had a transformers division, right? So how is that going right now?
What is it? Sorry.
Sorry, I must have mistaken. Sorry. Yeah, I was curious about the maintenance capex going forward. How is it going to be?
I already mentioned that I think we are going to do around 25 crores this year, including the smart meter capex, balance capex.
No, I'm curious about not the incremental capex, the maintenance. So to sustain, like, we'll probably need to do maintenance capex for existing infrastructure, right? What would that be, not the incremental capex?
I don't have a split on how much maintenance, how much new capex that you're making, because there's no major capex that we are making as of now. There's no major capex other than smart meters and the Saudi Arabia plant. We are not going to make any major capex as of now. So whatever we are making will be for maintenance.
Understood. And one more thing.
I think you should. Too many questions. We'll let others also have a chance now.
Yes, sir. Can we please request you to come back in the queue for the follow-up questions?
Okay, sure. Thank you.
Thank you. The next question is from the line of Guneet Singh from Counter Cycle PMS. Please go ahead. Sir, you're unmuted. Your line is unmuted. You can go ahead.
Hello, yeah. Thank you for this opportunity. So, sir, you mentioned 1,000 crore revenues from smart meters in FY'26. So I just want to understand, do we have the order pipeline for that? I mean, what gives us the confidence that we will be able to reach full utilization? That's the first question.
As I mentioned, I think we are in discussion with the customers, the AMSPs, and we see the potential and see what kind of orders they have with them, which they ultimately have to give it to meter manufacturers. So based on that, I think we are confident that we will be able to get the 4 million meter order for next financial year. So that's the confidence that we have. One. Secondly, I think we also see that there are, as I mentioned in my call, there will be a lot of fallouts. There will be a lot of integration issues with meters and softwares. So there will be a lot of struggle for the AMASPs also on the installation side. So we are seeing all these things already, and we're getting prepared to how to overcome all these challenges that the customers are already facing. So based on these technological advantages that we have, and also the business with the customers, we are confident of this for next year.
All right, sir, got it. So, sir, according to current market dynamics in smart meters, I mean, what would be the demand and what would be the overall industry supply in the smart meter segment in India? If you can throw some light.
The known demand is around 25 crore meters. And the supply today should be around 3 crore meters a year. And no,
all right,
still, yeah, it is. The capacity is 3 crore, but it's still not supplied. Still not. The supplies are not going still.
All right, so sir, with the new line with this commercializing, what kind of depreciation can we expect? I mean, overall for the company in FY'26.
You mean to say because of the smart meter investment?
Yeah.
I don't think there will be significant change in depreciation because of smart meter. Because smart meter, I think we have investing around 25 crores to be depreciated over a period of 15 years. Or even 10 years, it's going to be 2 crores per year extra.
All right. And sir, do we plan to raise any debt, or do we plan to pay down any debt in this financial year? What is the guidance in that regard?
We have already taken debt for our smart meter factory, which is around 25 crores, but we have availed only around 10 out of that. So there is no other new debt long-term debt that we are planning to take.
All right, sir. Great. That's all from my side. Thank you.
Thank you very much. The next question is from the line of Amit Agicha from HG Hawa. Please go ahead.
Yeah, good afternoon, sir. Am I audible?
Yes, you're audible, sir.
Yeah. Congratulations, Mr. Doraiswamy, for the good set of numbers. My question was with respect to the, is the company planning any bonus? Because in last 1995, the company had given 1:1. The reserves are ample, so shareholders will be also happy.
Thank you for suggesting this. We'll definitely look into this possibility. We haven't so far thought about a bonus issue as of now. And for all of your information, I think in KC we just did a split and a bonus in our subsidiary.
Okay, thank you.
Thank you very much. The next question is from the line of Rohit Ori, Progressive Shares. Please go ahead.
Hi, sir. 2 or 3 questions from my side. First one being on the copper pricing been fluctuating a lot over the last 3 or 5 months. How are we coping up with that and the inventory management, if you'd like to share that?
It's definitely challenging because a very smooth upward or downward movement is easy to manage, but any spikes are very, very difficult to manage, and that's one of the reasons that our EBITDA margin on the wire and cable industry has gone down by close to around 2% this quarter. So it has definitely affected because of the sudden spike of up and down. That is one reason. And we continue to buy and sell on a monthly average.
Okay.
That's one of the reasons that we are also insulated to some extent. However, said that, it is, but you cannot really control the customer placing an order or not placing an order. So it's always a customer will place more orders when the copper prices are spiking up suddenly. So that's when I think we are caught in a place where we don't have a copper at a old price, but we have to sell. So that is when that the margins are getting strained. So a balance of that, I think, is still being worked out, but it's quite challenging.
Do you think that there's still more pain left in the upcoming quarter as well?
No, I think even in the month of end of June and beginning of July, I think it started stabilizing.
Okay.
So it looks like I think it is more stable in the last 2 months now.
Okay. So my second question is related to this plan to establish a subsidiary in Saudi Arabia. Sir, I just needed some more clarity on that. Are we going to go there and manufacture, or are we setting up a sales or service department over there where probably you might make most of the 80% of the products here in India and then send it across to Saudi and then probably do the packaging and finishing final touches over there and then sell it across to probably Europe or US?
We are actually, it's a combination of both. There are certain products which we cannot do anything here and take it there because it has to be value added in Saudi Arabia to get a 40% value addition certificate. So that's why I think certain products will be manufactured in Saudi, but there are certain products that we will produce here in India, take it on a CKD condition, and then do the finishing in Saudi Arabia. So it's a combination of both that we are doing. And to answer your question, yes, it's a manufacturing plant, not just a sales and marketing.
So, because going in international frontiers, the employee cost will be something that will hit us a lot. Because we have this lovely strategy here in Coimbatore where we have employed quite a lot of female staff and they do the job perfectly. So just on the employee cost going forward with the Saudi arrangements, if you would like to share something.
I think to start with, the Saudi plant is going to be a very small plant to be set up there for the Saudi Arabian market to start with in the phase 1, and then we will be looking at the other GCC countries from that plant. So that's the idea. Definitely, the cost of employment in Saudi plant will be more as a percentage of sale when compared to what the Indian plant is. But then there are inherent advantages when you go there. Because the price can be a little higher, which can cover the increased employment cost, and there will be a demand for the Saudi-made product in Saudi Arabia. So that's the advantage, and I think we are just testing the water. And of course, there are a lot of risks involved in going to a new country in Saudi Arabia. How the political stability will be, how the policy stability will be. There are a lot of questions. We expect things will be good because we see a lot of other foreign OEMs setting up plants there and started manufacturing, and who are all our customers also.
Oh, okay.
So looking at them, I think we are trying to test the market and see how it goes forward.
So last question on any corporate developments that we should expect from your side, split, because if you just check that the spreads between the ask and bid is slightly higher, do you think that there should be a stock split that should come through for Salzer Electronics?
I didn't get you. You're asking me for any corporate announcements or?
So the stock split,
No,
is the board contemplating?
No. Right now, we are not thinking about that.
Okay. Okay, sir. That's all from my side. Thank you.
Thank you very much. The next question is from the line of Parneet. Please go ahead, sir. So you're unmuted. So are you able to hear us? So your line is unmuted. You can go ahead with the question.
No, I think he's not here.
So should we go ahead with the next question since Mr. Parneet is unable to?
Yes, please. Yeah.
Hello.
Yeah. Hello, Parneet.
Sorry, sir, the participant has got disconnected. The next question is from the line of Hemal, individual investor. Please go ahead.
Hi. Thank you for the opportunity and congrats on the set of numbers.
You're not audible, sir. Can you repeat the question?
Am I audible now?
You're audible,
yes.
sir.
Yeah.
Okay. I said thank you for the opportunity and congrats on the set of numbers. I'm new to this company. I heard everything. I just may have missed out on a few. I just want to confirm two things. What's your net debt position as of today? And what is your best EBITDA margin outlook of, because you said smart meters is something which you have not accounted for. What is the EBITDA margin outlook for the year that you think that we should look at?
The net borrowings on working capital is around 281 crores, and long-term debt is around 16 crores, 15.85. That's the debt level that we have, more or less very similar to what it was in the March balance sheet. So there's not much changes in that. On the EBITDA margin position, I think I already mentioned in the call. I think we expect to close this year at around 10% or little more than 10% is what we expect to close. This is without considering the smart meter factory. Because on the smart meter, we are yet to see an order inflow, and then once we start that, then we will be able to give some kind of guidance on that. But we expect on a full capacity utilization, smart meter can generate 14% EBITDA.
And sir, on smart meter, only one question. I was just reading an article which said that India has 7 crore smart meter manufacturing capacity, but I heard on the phone it's only 3 crore. So,
which company you're talking about?
3 crore or 7 crore?
Sorry?
I read an article.
I think your voice is breaking. That's why I'm not able to clear it. Yeah.
You hear me now? Is it better?
It is better
yes.
now.
Yeah. I was saying that I was reading an article which said that smart meter production facility capacity in India is around 7 crore. But if I'm correct, you said it's around 3 crore, right?
Yeah, I mean, there might be a lot of small manufacturers, medium-sized companies. I'm talking about the large companies. If you consider all of them, I think it won't be more than 3.5 crores.
So what is our advantage relative to them? Like, what do we bring to the table that is differentiated from all these smaller or larger players?
The first thing is, I think there is a large demand-supply gap because there are companies who have taken crores and crores of meter orders a couple of years ago and then still struggling to install the meters because there is no supply of meters. So that means there's a large demand-supply gap. That is first. Second, I think we have been into the engineering manufacturing for the last close to 40 years now. and we are completely backward integrated, which is a big advantage for us compared to many other meter manufacturers. And we have the logistics completely set on the procurement side, both for the raw materials, components, and we have a good team that we have established now. We will be able to take this to the level that we are looking at. One lot of companies have been into meter manufacturing for a long time, but then the smart meter is a new thing. So they are all changing their regular digital meters into smart meters. Out of this, I think the top companies have been quick enough to change over and start making the meters, and the other small and medium-sized companies are still struggling to get the smart meter perfect, because it has to work in an environment, an unknown environment outside, where we don't know what the temperatures are, what the environmental conditions are, rain, dust, and so many other things. In these conditions, how this product is going to work is something that's unknown. So that's where I think you need a bit of experience working in various products, how this product can work in such conditions. What we have done is we have made a product that has been tested at very, very severe conditions. We have proved that to the customers who have been talking to us, and they have all appreciated the way in which this is being made and tested in our factory. So definitely we are bringing a high quality product to the table. At the same time, we are assuring that there is supply, consistent supply that can come to these customers for them to finish their project on time.
So would the warranty liability of the smart meter be on ourselves, or would it be just a pass-through? Like, would you have any warranty?
We need to give a 8-year warranty for the meter.
So you would have some liability on that, right?
Yes, yeah.
How much is it typically, like 2% of sale or 5% of sale?
We expect that it's not going to be more than 0.5% of the sale, but the worst case scenario can be 1.5%, 2%. Yeah.
Okay, so 0.5 to 2% we have to account on our books still at least for 8 years, essentially.
Yes, yeah.
And absolute final question. So, because you said backward integration in your technology, if you take, is that one of the reasons why you would have a better cost advantage relative to other larger players, or is it like a rice business and everybody who is in this large scale business, everyone has the same technology and everyone can have this robust, testing done in the large ones, not the small and
yes, I think the other large ones definitely have this because they also will have the volume. They also have been experienced in making the meters. But my point is that we are a new entrant, but we will be on par with these large manufacturers. That's the point I'm trying to prove my customers also.
Okay. Thank you, sir. I got it. I appreciate your help.
Thank you very much. The next question is from the line of Praneet. Please go ahead, sir.
Hello. Yeah. So I was curious about the Salzer transformer facility. So how is it scaling up, and how have you been doing sales in the transformer department, and how is the capacity utilization after the investment?
Which one? Which company? Which
transformers, Salzer transformers.
Transformers has been growing very well. I think it is one of the fastest growing product for us. It still continues to be, and the capacity utilization in the transformer division is close to around 75%.
Okay. So what is the exact sales number for that particular segment, the transformer segment?
I don't have a breakup of my switchgear sales as of now, but I can share it with you through the team.
Okay, that would be great if you could share it after the call. And so one more thing is, we've done 37 crores worth of related party sales. So which institutions do we actually do the sales to, and why do we do it?
There are a lot of exports that we do on a consolidated basis to our customers. So that takes the majority of the sales. That's the only sale that we do.
Understood. So one more reason I wanted to ask you, in the EV, we did a further investment in the EV charging manufacturing subsidiary. What is the reason for the further investment, and why didn't the other party also invest an equal amount to maintain their ownership? What are the terms of the deal?
The original terms of the deal itself was that as the investment requirement is coming, I think Salzer will invest and others will dilute themselves, except the foreign collaborator, who will continue to own 20%. So that's the original deal. So that's why I think we continue to invest, and then our stake goes up.
So how much investment are we expecting to further the dilution of the rest of the shareholders?
So far we have invested only close to around 1 crore, and we are not expecting any major investment as of now until the testing is completed and the product is proven.
But last, I think, 6 months ago, you mentioned that it is being already tested, and in Pune, it's almost at the end of its testing and quality standard phase. So what has been taking extra time?
I think I mentioned in my last call clearly that we have completed all testing except for one last test which has failed. And that communication is a software change that we have to do. And we are now working with our collaborator to do that software change, because software change is a major change. That's what we see right now, which needs a lot of resources to be invested to change that software to meet Indian standards, which is what our collaborator is trying to do, and we are trying to make them do, because that is their proprietary technology.
Understood.
Until that is done, this testing won't be complete.
Okay. So, and like as you alluded to in the previous calls, you wanted like our EBITDA margin to reach back to 12%, like what we were doing in 2017 at times. So, can we expect that in the further 2-3 years, or is it going to remain in the 10% range?
As of now, I think this year we are trying to get to this 10% level. Whether the business without the smart meter, the existing core business, whether it will go to 12.5% in next 2 years, I think in next 2 years we can expect this to be around 11.5%, if the same revenue ratio remains 55 and 43% of switch gears and wire and cable.
And we wanted to reach an ROC of 18%, right? In like a few calls you mentioned that. So do you think we will reach that level, or is it going to be in the subdued levels what we are right now?
No, I think with the addition of smart meter, I'm sure that in FY'26-27 we should be able to reach that level.
Okay, thank you. That's all from my side. And it will be great if you send the transformer details.
Thank you, sir.
Thank you very much. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to Mr. Rajesh Doraiswamy for closing comments.
Thank you very much for all the participants who have been here today and shown so much interest in the company. Looking forward to interact with you again in the next conference call. Thank you, all of you.
Thank you. On behalf of Progressive Shares, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.